Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, January the 12th, 2016. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I have commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. All right, having that out of the way, let's get this on. We have had some economic data come out this morning over in Great Britain. We've had manufacturing production, which is factory production, came in at negative 0.4%, was expected positive 0.1%. Industrial production came in at negative 0.7% and was expected to be unchanged. We did have Fisher speaking. He is an FOMC member, and he usually correlates the economy to baseball strategies in the ninth inning of the baseball game, maybe needing to go into extra innings, things of that nature. So he's kind of interesting to listen to. He's pretty witty. Not that I necessarily agree with everything he says, but the overall markets are coming off from the highs of the day. Overnight, these are the overnight lows. We rallied up and we're about 67 points higher in the NASDAQ. As you can see, we're only up about 17 right now, so giving up about 50 points from the upside. The downside has not been printed intraday, so that was an overnight low. Same thing here with the E-mini S&Ps. As you can see here on the chart, they are flirting with unchanged, positive to negative, quarter a tick here and there, unchanged right now. But again, this was much higher this morning, and we have done nothing but really sell off since about 10 o'clock Central Time. And here is a breakdown of, this is a 15-minute chart showing intraday 15-minute chart of the daily charts. Each one of these blocks is a daily move. This is the overnight low. As you can see, we rallied up and have come down. This value area is a smaller time frame than the last profile that I showed you, but the market should want to try and print these overnight lows sometime today, I would have to say. That's usually the move that the market makes, especially when we've come off like that. So I could easily see it come down there and test those overnight lows. A couple of trades that I've done. I talked about this Facebook trade yesterday, and I think I accidentally said that I did puts in this, and I had sold the January 103 calls. And I think I may have said I sold the puts. But anyway, I sold these Jan 103 calls for 47 cents. And the reason why I did this in the January, and I only had this on for a couple of days, on this sell-off in the markets, I was covering a lot of calls that I was short, and that was creating a situation in my portfolio where I was long deltas. Now, in a sell-off, you don't want to be long deltas, so I was trying to scramble and find different products that I could add to my portfolio and add short deltas to that to get short the overall market. So I did a couple of things with like Facebook just in the January with only a few days to go. And the reason why I didn't want to go out to February, as you can see, we've got an earnings coming up within that next expiration cycle. So I went and defaulted to the January contract and did the January 103 calls that I sold originally for 47 cents and bought them back for 9 cents there. So that, sorry about any confusion there, but covered some of those quick plays that I had. USO, finally puked this one out. USO, I took a bigger loss than what I'm usually looking at taking, and I had on the January 11 puts, and originally I had sold those for 39 cents and bought them back for $1.74. Usually I'll take 3 times my of my max profit or the credit I received, which was 39 cents usually, so that would have been about $1.20. Went a little over that, so it went about a little over 4 times what I normally would want to take. So anyway, so that's USO. Puke that one out. McDonald's took this trade off as well. I had on the January 120 puts that I had bought and sold the 115 puts to create that long put spread in there. It had low IV, and as you can see, the IV has gone up, which helped me out in this sell-off, which the direction was correct, so that worked out pretty well. I really wanted it to go down here and print the 15s a little bit better than it did. It went inside the 15 handle, but never really broke through my 15s. So I didn't get an opportunity to really get my full max profit or touch on those 15 puts. So I held out for a little bit longer and started rallying back yesterday. So I decided to cover that. I had on those Jan 120 puts that I was long, short the 115 puts, and had paid an original debit of $2.49, sold those out for $3.14. So that was a nice little profit there. But going into the last couple of days, there was only like 3 days left to go in that January cycle. So I wanted to get off some of those because of gamma risk and everything else that goes into that just superseded the profit. So I got out of that one. HES Corporation, I took off today. This was part of that Facebook thing where I did the short duration for a short quick hit, add short deltas to my portfolio. Took that off today. HES Corporation down big, but I sold the January 50 calls originally for only 15 cents, bought them back for 5, so I made a dime on those, but it helped me out with short deltas and P&L for all intents and purposes. That's about all I got for you today. The one thing I am looking at doing is some TLT. TLT's been rallying pretty hard today, probably as a precursor to the equity sell-off, but nonetheless, TLT is pretty high right now, so I'm going to be looking at adding a long put spread to that. I'm thinking about like the 120, I think it was the 125, 121, something like that was looking pretty good for me. So keep your eye out for that. I might blast that out on Twitter for you guys. So if you follow me at Wolfman's blog, you can find that. Also, earnings season coming up. It's making it real hard to put on longer duration plays right now because we have earnings season coming in. I did a webinar on earnings and how to play those. So you can go to protraderstrategies.com and get that one. It's a really good one. Those earnings trades have been seemingly my bread and butter for the last several cycles. So those work out really well, and I'm looking forward to earnings season. That's all I got for you guys today. If you can't take that, take it easy.